Alright everyone, welcome back to the channel. My name is Shakir Ahmed, and today we're tackling a question I get asked all the time. Shakir, I've got $1,000, what's the smartest way to invest it? Especially looking ahead to 2025. And let me tell you that $1,000, if you use it wisely, can be a really powerful first step, or even a great addition, to building some serious financial momentum. It's not about having millions to start. It's about starting smart, being consistent, and understanding what you're getting into. Investing $1,000 in 2025 isn't just about stashing cash away, it's about making that cash work for you, paving the way for future growth and opportunities. Now, before we dive in, it's super important to remember that investing isn't a one-size-fits-all kind of deal. What works for your buddy who's all about high risk, high reward, might not be the best fit for you if you're looking for something more stable, or if you need that cash back in a year or two. Your personal risk tolerance, how comfortable you are with the idea of potentially losing some money for the chance of bigger gains, and your financial goals, whether they're short-term like saving for a down payment or long-term like retirement, are going to massively influence where you should park that $1,000. Don't just chase a hot tip, think about what you want to achieve. So in this video, I'm going to break down 7 solid ways you can invest that $1,000. We're going to cover everything from the super low risk options, perfect if you're just dipping your toes in or need that money to be safe, all the way up to some higher risk, higher potential reward strategies for those feeling a bit more adventurous. We'll look at options that are great for short-term goals and those that are designed for long-term wealth building. My goal here is to give you a clear roadmap so you can make an informed decision and get that $1,000 working harder for you in 2025. Let's get into it. First up, let's talk about what is arguably the safest, most straightforward way to get some return on your $1,000. A high-interest savings account, often called a high SA, or a certificate of deposit, known as a CD. Now, these aren't going to make you a millionaire overnight, let's be real, but if your top priority is capital preservation, meaning you absolutely do not want to lose any of that $1,000, and you want to earn a little something on top, these are fantastic choices. Think of it as parking your money in a very secure spot that pays you a little rent. For 2025, we're seeing annual percentage yields, or APYs, in the neighborhood of 4% to 5% for many online banks. That's way better than the practically zero interest you'd get from a traditional brick-and-mortar bank's basic savings account. The beauty of HISAs is their liquidity. You can usually access your money relatively easily if you need it, though there might be some limits on withdrawals per month. CDs, on the other hand, typically offer a slightly higher interest rate, but you're locking your money away for a specific term, say 6 months, a year, or even longer. If you pull it out early, you'll likely face a penalty. So a CD is great if you know you won't need that $1,000 for that set period. The best rates are almost always found at online banks like Ally, Marcus by Goldman Sachs, or Discover Bank. These banks have lower overhead costs than traditional banks, so they pass those savings on to you in the form of better interest rates. Plus, your money is typically FDIC insured up to $250,000, making it incredibly secure. Alright, moving up the risk-reward ladder just a bit, but still a fantastic option for most people, especially for long-term growth, is investing in a broad-market exchange-traded fund, or ETF. Think of an ETF as a basket that holds a whole bunch of different stocks. And when you buy a share of the ETF, you're essentially buying a tiny piece of all those companies in the basket. A really popular example is an S&P 500 ETF. The S&P 500 tracks the performance of 500 of the largest publicly traded companies in the United States, companies like Apple, Microsoft, Amazon, you name it. So instead of trying to pick individual winners, you're betting on the overall growth of the US economy. This is a cornerstone of passive investing. Historically, the S&P 500 has delivered average annual returns of around 7% to 10% over the long run, even when you account for inflation and those inevitable down years. Of course, past performance is no guarantee of future results, but it's a pretty solid track record. Popular S&P 500 ETFs include $SPY, which is one of the oldest and largest, or $VOO from Vanguard. If you want even broader diversification, you could look at something like $VTI, which is a total US stock market ETF, giving you exposure to small, mid, and large cap stocks. You can buy these ETFs through pretty much any brokerage account. Think Fidelity, Vanguard, Charles Schwab. or even newer platforms like Robinhood or Webull. It's a fantastic way to get diversified exposure to the market with a relatively small amount of money. Now, what if you really believe in a specific company, like Apple or Microsoft or Google or maybe even Tesla, but you look at their stock price and it's like $200, $400, or even more per share? Your $1,000 might only buy you a couple of shares, or maybe not even one full share of some of the really high-priced ones. This is where fractional shares come in, and they are a game changer for investors starting with smaller amounts. Fractional shares allow you to buy a portion of a share rather than the whole thing. So instead of needing, say, $180 to buy one share of Apple, you could invest just $10 or $50 or $100, whatever you're comfortable with, and own that corresponding fraction of a share. This is incredibly empowering because it means you can build a portfolio of companies you genuinely believe in and want to support, even if their share prices are individually quite high. You're not limited by the per-share cost anymore. Many popular brokerage platforms now offer fractional shares including Robinhood, Fidelity, SoFi Invest, and Charles Schwab. This approach allows you to diversify your $1,000 across several different individual stocks if you choose, rather than being forced to pick just one or two because of high share prices. It really democratizes investing in individual companies, making it accessible to everyone, regardless of how much you're starting with. It's a great way to get your feet wet with stock picking without needing a huge bankroll. Okay, so maybe you like the idea of investing in the market, but picking individual stocks or even specific ETFs sounds a bit daunting, or perhaps you just don't have the time or interest to manage it actively. If that sounds like you, then a robo-advisor could be an excellent choice for your $1,000. Essentially, a robo-advisor is an online platform that uses algorithms to create and manage a diversified investment portfolio for you, based on your financial goals, your timeline, and your risk tolerance. You answer a series of questions when you sign up, like what you're saving for, when you'll need the money, and how you feel about market ups and downs, and the robo-advisor does the rest. These platforms typically invest your money in a mix of low-cost ETFs covering various asset classes like US stocks, international stocks, and bonds, automatically rebalancing your portfolio as needed to keep it aligned with your goals. Some popular names in the robo-advisor space include Betterment, Wealthfront, and SoFi Automated Investing. They often have very low minimum investment requirements, sometimes even no minimum, making them perfect for that $1,000. The fees are generally quite low too, often a small percentage of your assets under management per year. It's a truly hands-off, passive way to invest, ideal for beginners or anyone who wants a set-it-and-sort-of-forget-it approach, knowing a sophisticated system is working to optimize their investments. Now, this next one is a bit different from directly investing in the stock market or a savings account, but honestly, it can offer some of the highest returns imaginable investing that $1,000 in. I'm a huge believer in this. Think about it. Acquiring a new skill, earning a valuable certification, or getting the tools you need to become more efficient or start a new income stream can pay dividends far beyond what typical market returns might offer. This is about increasing your earning potential, which then gives you more capital to invest down the line. It's an investment in your human capital, and that's incredibly powerful. So, what could this look like with $1,000? You could enroll in online courses to learn in-demand skills like coding, digital marketing, graphic design, video editing, or even specialized knowledge about AI or blockchain. Platforms like Coursera, Udemy, or Skillshare are packed with these. You could also pursue professional certifications, maybe a Google Ads certification, an AWS Cloud certification, or a project management certificate. These can make you much more valuable in the job market or enable you to charge more as a freelancer. Even investing in books, coaching, or tools and software that improve your productivity for a side hustle can be a phenomenal use of that $1,000. The return on investment here isn't just a percentage, it can be a complete career shift or a significant income boost, potentially yielding returns of 1,000 times or more over your lifetime if it leads to a higher salary or a successful business. Building directly on the idea of investing in yourself, another incredibly smart way to use that $1,000 is to directly fund the launch or growth of a side hustle. While investing in skills is about improving your potential, this is about taking action to create an active income stream. That $1,000 can be the seed money you need to get a small business off the ground, and if done right, it could turn into a recurring source of income that far surpasses your initial investment. Think of it not just as an expense, but as capital to generate more capital. This is where entrepreneurship meets smart investing. So, what kind of side hustles can you start or boost with $1,000? You could get into buying and flipping items online, maybe sourcing things from thrift stores, garage sales, or wholesale and selling them on eBay, Facebook Marketplace, or Etsy. You could invest in the initial setup for a dropshipping or print-on-demand e-commerce store. The $1,000 could cover website costs, some initial marketing or product samples. If you're into content creation, that $1,000 could buy you a decent microphone, a camera, lighting, or editing software to significantly upgrade the quality of your YouTube videos, podcast, or blog, potentially leading to monetization. The key here is to pick something you have some interest or skill in, and to treat that $1,000 as serious startup capital, focusing on generating a return. Alright, for our seventh and final option, we're venturing into the high-risk, high-reward territory cryptocurrency. Now, I have to preface this with a very big, bold caution sign. Crypto is incredibly volatile, prices can swing wildly, and you could lose a significant portion or even all of what you invest. So, if you're considering this for your $1,000, it should absolutely be with money you are fully prepared to lose. Think of it as the speculative part of your portfolio, maybe just 5 to 10% of your investable assets, not just this $1,000, if it's all you have. Please do your own thorough research. Don't just buy a coin because someone on TikTok hyped it up. That being said, for those who understand the risks and are comfortable with them, crypto offer the potential for outsized returns. If you're going to dip your toe in, it's generally advisable to stick with the more established cryptocurrencies, at least initially. Coins like Bitcoin, which is the original and largest crypto, Ethereum, which is the backbone for a lot of decentralized finance and NFTs, or perhaps Solana, known for its speed and lower transaction fees, are common starting points for research. Again, this is not financial advice to buy these specific coins, but they are ones that have a longer track record and larger market caps than many of the thousands of altcoins out there. The key here is education, caution, and never investing more than you can afford to see go to zero. Alright everyone, so there you have it. 7 smart ways you can consider investing $1,000 in 2025, ranging from the super safe all the way to the much more speculative. We've covered high-yield savings accounts for that guaranteed, albeit smaller, return. We talked about broad-market ETFs like the S&P 500 for long-term passive growth. Then there's fractional shares, letting you own a piece of your favorite big-name companies. Robo-advisors if you want a hands-off, algorithm-driven approach. And of course the potentially massive ROI from investing in yourself through skills and education, or by using that $1,000 to kickstart a side hustle and generate active income. And finally, a little bit on crypto, with all the necessary warnings attached. The most important thing now is not just to have watched this video, but to actually. That $1,000 has potential, but only if you put it to work. It doesn't matter if you start small, what matters is that you start. Pick the option, or a combination of options, that best aligns with your personal financial goals, your timeline, and your comfort level with risk. Don't let analysis paralysis stop you. Do a little more research on the 1 or 2 options that resonated most with you, open that account, buy that course, or map out that side hustle. The future you will thank you for it, I promise. So, if you found any value in this video, if it gave you some ideas or a bit of motivation, then please do me a huge favor and absolutely that like button for the YouTube algorithm. It genuinely helps the channel out more than you know, and allows me to keep making content like this for you guys. And of course, if you haven't already, hit that subscribe button and ring the notification bell so you don't miss out on future videos. Let me know down in the comments which of these investment options you're considering for your $1,000, or if you have any other great ideas. Thanks so much for watching, I really appreciate your time, and I'll see you in the next one.